Hello friends, welcome to my brand new video on residential status. Every exam we are seeing one or the other problem with respect to residential status and taxability of income from various sources. So let's understand the concept very well so that in exams we shall not face any such problems. So coming to residential status, there importantly are two kinds of residents, that is resident in India and non-resident in India. Whereas resident in India is further divided into two categories, that is ordinarily resident and not ordinarily resident. Basically, the resident and ordinarily resident is a person who pays tax on each and every income he earns all over the world. And for the other two categories, we will have to decide if the income is taxable in India or not taxable in India. So, coming to the tax incidence. Coming to the tax incidence of an individual depends upon his residential status, which is defined on the basis of his physical presence in India, as per the Income Tax Act. That is what we have discussed in extensively in our classes, but here we'll understand how it is different from each other. So coming to the first point, so let us understand who is resident and who is non-resident. First, coming to the first condition, that is if a person is in India for more than 182 days in financial year, that is starting with 1st of April to 31st of March, then he would be definitely considered as resident in India. If he is not staying in India for 182 days, there is another condition, which is in India for more than 60 days in this financial year and more than 365 days in preceding 4 financial years. If an answer to this is yes, then also he will be considered as resident in India. If for both these conditions the answer is no, then he will be considered as non-resident in India for this financial year. Let us understand how the resident is classified into further two categories, that is resident but not ordinarily resident and resident and ordinarily resident. Here we will have to understand two more conditions, that is if a person is non-resident in India for 9 out of 10 preceding financial years. If this condition is satisfied, if he is a non-resident in India for 9 out of 10 preceding years, he will be definitely considered as a resident but not ordinarily resident. In the next condition, if this is not satisfied, let's say if he is a resident in 9 out of 10 years, the next condition comes. In India, he is in India for less than or less than 729 days in the preceding 7 years, then even if this condition is satisfied, he will be considered as not an ordinarily resident in India. If he is staying more than or equal to 730 days in preceding 7 years, then he will be considered as resident and ordinarily resident in India. So let us understand how the incomes generating shall be taxed in these three categories. If the income is an Indian income, then all the three categories it will be taxed in India, that is resident, ordinarily not ordinarily resident, as well as non-resident. All the three cases will be taxed in India. Coming to the foreign income shall be taxed only in the case of resident. Coming to the resident but not ordinarily resident, yes, it will be taxed only when the business is controlled out of India. If the business is not controlled out of India and the money is received outside India, then also the taxability doesn't happen in India. Coming to the foreign income of a non-resident, it will definitely be not covered in Indian taxation. So let us understand it this way. So there is income which is received in India, so taxable for all the three categories: resident and ordinarily resident, resident, not ordinarily resident, and not non-resident. All the three categories, if the income is received in India, will be taxed in India. Income accrued or arised in India, it is taxable for all the three categories. If the income is accrued or arising in India, all the three categories, it is taxable in India. So the third category, income is accruing outside India and received outside India. This is nothing but our foreign income which is received outside India. So in this category, we will have to see from where the business is controlled. If the business is controlled within India, then controlled from India, then taxability is for ROR and RNOR. It is not taxable for non-residents here. Very important point to understand. In the other case, business is controlled outside India, taxable only for ROR. Even RNOR income is not taxable if the business is controlled outside India and received outside India. So that is most important. In this case, only RNOR will be taxed in, only ROR will be taxed in India. Thank you very much. Please subscribe.